Welcome back to The Explainer. Today, we are unpacking a truly mind-blowing financial milestone. According to our source material, on the morning of June 12, 2026, the SpaceX IPO hit the NASDAQ. And literally, in the very first second of trading, history was made. Elon Musk was crowned the world's first trillionaire. But, how does wealth on that massive of a scale actually work? Well, let's dive in and find out.
First off, we've got to grapple with the number itself, $1 trillion. It's a number so outrageously huge that human brains genuinely struggle to even process it. To put it in perspective, if you were handed this fortune and you went out and spent $1 million every single day, it would take you over 2,700 years to run out of money. It's just wild. Okay, let's dive into this. To really comprehend the gravity of a trillion, we have to compare it to time. So if you go back 1 million seconds, you go back, about 11 and a half days. Not that long, right? But 1 trillion seconds, that takes us back 31,000 years. We're talking deep into a time before human civilization even began.
So that scale of money brings us to a massive mechanical mystery. How does a $1 trillion fortune actually function if almost none of it is sitting in a bank account? Our source notes that this wealth is primarily derived from his 38% stake in SpaceX, which, by the way, achieved a $2.2 trillion valuation at IPO, combined with a 15 to 25% stake in Tesla. It's practically all tied up in ownership. So to understand how this functions, we really need to peel back the first layer of the onion.
Section 1. The illusion of paper wealth.
Right off the bat, there's a monumental difference between liquid cash and paper wealth. Musk himself has actually stated that only about 0.1% of his wealth is actual cash. Now, to be fair, 0.1% of $1 trillion is still $1 billion, which is staggering on its own, but the remaining 99.9% is entirely tied up in company shares. So the crucial point is what the source calls the paper wealth trap. You might be thinking, well, why not just sell the shares and put the $1 trillion in the bank? Well, if you tried to sell off a massive volume of shares instantly, the market would absolutely panic. Other investors would assume the company is failing, the share values would crash, and that $1 trillion wealth would just evaporate into thin air. It's a number built purely on market trust. Section 2. Theories of valuation, castles in the air. Okay, so if the wealth relies entirely on market trust, how are these companies valued so highly in the first place? Let's look at the fundamental numbers the source provides. At the time of this IPO, SpaceX was actually operating at a multi-billion-dollar loss, including a reported $5 billion loss in 2025 alone. Yet the market valued it at $2.2 trillion. Meanwhile, the research firm Morningstar estimated SpaceX's actual fundamental value at around $780 billion, which is obviously just a fraction of its market price. To explain this massive gap, the analysis points to economist Burton Malkiel's theories of stock valuation. Basically, there's the firm foundation theory, where a company's shares are valued strictly on current revenue and profit. And then there's the castles in the air theory, where investors are buying into psychological hype and future dreams. The source argues that Musk's valuations strongly align with building those castles in the air. And this brilliantly illustrates exactly how those castles are constructed, especially when we track the source's timeline of grand, unfulfilled promises used to fuel investor excitement. I mean, think about it. A Hyperloop proposed in 2013. Humans on Mars in 10 to 12 years proposed in 2014. Fully self-driving cars in 3 years promised in 2015. 1 million robo-taxis by the next year claimed in 2019. The underlying mechanics show that investors are buying into the dream of these concepts, even when the timelines don't quite materialize. This phenomenon is so pronounced that prominent investors and even Harvard professors analyze it as a unique financial ecosystem. As prominent investor Steve Eisman notes, this is an IPO of a sci-fi storyteller made for a sci-fi cult. The valuation is driven heavily by the narrative rather than immediate product delivery. Section 3. Extracting cash. Buy, borrow, die. So if the wealth is on paper and he can't sell it without crashing the price, how does he afford to make giant real-world purchases? Well, this brings us to a strategy widely utilized by the ultra-wealthy, known as buy, borrow, die. It's beautifully simple in its mechanics. Step 1, you hold your shares forever because you only pay tax if you actually sell. Step 2, when you need cash, you use your shares as collateral to borrow money from banks at incredibly low interest rates. And finally, step 3, you continuously extend those loans until death, allowing the wealth to pass down entirely tax-free through inheritance loopholes. We can actually see these exact mechanics in action with the Twitter acquisition.
Musk didn't just sell shares and pay income tax to generate the cash for that. Instead, he pledged $62.5 billion in Tesla shares as collateral to secure a $2.5 billion bank loan. This strategy creates a massive, tax-free cash flow, all while keeping his paper wealth fully intact. When you utilize these loan strategies, the resulting tax math is pretty staggering. Looking at the data from 2014 to 2018, Musk's true tax rate relative to his wealth growth was roughly 3.2%. When you compare that to the average American worker, who pays an income tax rate of between 20 and 30%, you clearly see how the mechanics of paper wealth completely bypass traditional taxation. But here's the catch. Keeping those share prices high, and thus keeping the collateral for those loans high, requires immense external support. Which brings us to our final layer.
Section 4, the impact of political tailwinds. Now, what's really interesting about this next part is the fascinating correlation in the source data between political alignment and market valuation. The analysis notes that following a reported $90 million donation to the Trump 2024 campaign, Musk's net worth grew 5-fold in the subsequent 2 years, as his companies received highly favorable market conditions. This political alignment directly translates into actionable regulatory shifts. The source attributes several specific changes to this new administration, emphasizing how political shielding protects those castles in the air we talked about. For instance, the SEC fast-tracked the SpaceX IPO to just 15 days, skipping the usual months of waiting. The SEC also waived broker safe account rules specifically for this event. Furthermore, the FCC granted control of 10,300 Starlink satellites, and 40 prior investigations into his companies were reportedly closed. And these political connections are also cited as the catalyst for rapid international expansion. Take a look at this timeline regarding India. A February 2025 meeting with Indian Prime Minister Modi, followed by an April phone call, resulted in a June 2025 license for Starlink to operate in India. This effectively bypassed previous national security hurdles at a record pace. However, all of this creates a profound mechanical dependency, because this paper wealth relies so heavily on maintaining political favor to sustain investor confidence, it is highly fragile. To demonstrate this, the source highlights a reported 2025 dispute between Musk and Trump, during which Tesla shares dropped 14% in a single day. The market value is intrinsically tied to the political ecosystem. Before we wrap up, the source asks us to step back and contextualize the sheer gravity of this wealth scale. Just to put $1 trillion in perspective, the UN estimates that $40 billion a year could end world hunger. Additionally, an Oxfam analysis suggests that just a 10% tax on Musk's wealth could lift 800 million people out of extreme poverty. The capital locked in these shares holds immense global weight. Which brings us to the end of our analysis. We've uncovered that $1 trillion fortune isn't a giant mountain of cash sitting in a bank vault somewhere. Instead, it's a highly complex mechanism built on psychological market belief, tax-free loans, and crucial political tailwinds. It's a structure that literally requires constant momentum to survive. So, I want to leave you with this question to ponder. If this paper wealth is entirely dependent on market belief and political tailwinds, what happens to the world's first trillionaire when the wind inevitably changes direction? Thank you so much for joining me for this explainer. Keep learning, and I'll catch you next time.